Welcome everyone to the March 21st update for indexes and gold. Now there's been a pretty major correction in the markets across the markets we look at, the ASX 200, the American market, Germany, the Ftse UK market, China, and of course the gold index. So we're going to go through that now, but firstly don't forget to subscribe and click on the like button if you like the videos and get future updates. We're not recommending you trade any of these. This is purely an educational series to help you become more aware of how to trade effectively. So for an added explanation, in terms of the strategies used, please go to the strategy playlist under the Ftse Investing channel. Here we look at the weekly share prices and the weekly indexes that we review each week, and under the strategy playlist, that's where all our strategies are kept, such as the simple trading strategy, choosing what shares to trade, the average down approach, and how to trade the average down approach further explained, and also some money management ideas. So let's get stuck straight into it. First I want to explain to you what's happened in the last couple of weeks, and especially last week. We've taken a bit of a hit, especially due to the China index, and that's in the red at the moment. I'll explain that as we get to it later on, but let's go first to look at the ASX 200. So the ASX 200 this week, and you can see here each of these bars represents a weekly result. So over the last 3 or 4 weeks, the market has been consolidating from where it was previously. It was gaining quite a bit of momentum. Here we're looking at the 15-minute chart. So, and we're looking at a snapshot here every 5 months roughly. So it goes back about 5 months of data, 15-minute charts. So this past week, you can see here I've drawn a trend line, and it's continuing in a bit of a downtrend here, the ASX 200. So not looking good at the moment, although it's reaching this support level down here. So I'll see what it does in next week, whether it bounces off this support level or whether it continues a downtrend. You can see there the danger of it continuing a downtrend further down from there. Nevertheless, the ASX 200 opened up back here a few weeks ago, and it's been trending down. As you can see there, the profitability, this chart up here shows the profitability based on the 5 contracts we're trading. Also looking back at the margins required for each of these. So for each contract we open, we need $34 for the ASX 200. So we've got 5 contracts, so we need 3 times that to open 5 contracts. Now because we've opened 5 contracts initially back here, and we added another 5 there based on our entry criteria. So we entered 5 contracts there, we entered an additional 5 here, so now we've got 20 contracts. Hence, 10 positions, 10 contracts. So anyway, there, let's keep an eye on it and see if it breaks below this support line in the coming week. Next we look at the American market, the US 500, and that's $20 per contract. So we opened 5 contracts. It's generated $2,700 in 5 months with a drawdown of $1,864, which works out to about $547, divided that by about 5. And remember the drawdown, how that's explained, is basically going from the highest point of our profitability, so looking at from there to there, that would be considered a drawdown in terms of profitability. So let's look at the US market. As you can see here, over the 5 months, it's been going upwards. A bit of a correction there, a correction here, and now we have another correction there. So we'll keep an eye on that, see how it goes, similar to the ASX, if that will continue up or if it continues down. We've only got the 5 positions open there, as you can see, and that's giving us a bit of an impact on our profitability. Next we'll look at the German market. Again, $73 per contract. It's generated $11,000 over the 5 months with a $9,800 drawdown. And that $11,000 equates to roughly $2,200 a month. So look at the German market. So it's been doing quite nicely. Still in a bit of an uptrend, a slight correction here, but let's see if it comes back down to this support line. but we're not in any positions open at the moment. It opened back here, 5 positions, and it closed out there with a nice little profit. So you can see there, it opened, the profitability back there was, and we use a baseline of $100,000. So profitability started at 110,649, and you can see there it closed at 111,384. So I made a few $100 in profit in that trade from there to there, and we're not entered the market back again because it's in a downtrend, and it closed out successfully there. So the German market we're safe in that respect. Let's look at the Ftse. Now this has been held with the 5 positions back here, opened back here, and it's still in a hold of 5 positions, so it hasn't closed out yet. You can see there our profitability is dropping just a bit below our base of our opening position there, but it's broken below this this trend line, but there could be another trend line there which looks like it's broken below as well. So let's see how that performs next week. But over the 5 months, the Ftse has generated $7,400, which equates to about $1,400 a month, with a drawdown of $6,350. So just eyeballing it, you can see there the drawdown would have gone probably from that high there to that point there. So it goes from the highest profitability point down to the lowest before it recovers. Lastly, in terms of the indexes, we look at China. This is where we get the big hit happening to our profitability. And you can see there why. There's a massive correction there on the China market, and it may have broken our downtrend, but we haven't confirmed that yet. It needs to break above this level here next week. So it's come and bounced off that support line there, and it needs to break above that point there to be in a positive position in terms of any gains. As you can see there, it's taken a hit of about $54,000 from that point down to that low point there. And that's why China has taken the biggest hit in terms of profitability. So we're down. A drawdown was less than 30,000, but if our profitability is greater than our drawdown, we apply that to the drawdown. So currently that applies to whatever is the biggest drawdown period. So because of China, we're down $4,600 for the 5 months. But again, you can see there per contract, we need $352 per contract, and we're trading 5 contracts. And because it's doubled up a few times, we've entered 5 there, we had 10 there, 15 and so on, and we've currently got 40 positions open. And that also contributes to our profitability and our drawdown of profit. Lastly, looking at gold. You can see here it's just broken above our baseline because of the price has recovered a bit. As you can see there, it's got 30 positions open. It opened up with 5 back here. So, and that's got the smallest margin requirement per contract. And we're up at $431 with a $1,473 drawdown. Not a huge profit, but again, better than nothing. So as you can see there, even though it hasn't actually broken our trend line there, we're actually breaking our profitability because of the average down process. So every time we enter new positions, that can also hinder, but it can also help our profitability. So we want to see that break above that trend line to get in more positive territory. Okay, just again, emphasising this has been a pretty big hit to our profitability this week. Let's see how things go next week, and we'll review it again and see you next week in the index and gold update. Remember, feel free to subscribe and refer to our strategy page channel on the channel, which shows all the various approaches we take in terms of money management, the average down process, etc. Thanks everyone, and speak to you next week. Bye bye.